Good morning, everybody, and welcome to Saturday Morning Coffee at DTS. This has been a moderately popular event. The point of this one is that I don't really pick a topic. You see, there's no topic like the Wednesday presentations where there's a big topic and everything done up. And I always threaten myself that I'm going to just kind of log in with nothing prepared at all. And it's so funny how your brain works. I think everyone's works like this. When I have the Wednesday events, I usually don't pick the topic until that weekend, Saturday, Sunday before, because most of you guys probably all get, and maybe a couple of you actually read the weekly market summary that comes out. It's a free weekend publication. And in there, of course, is the calendar coming up for the next week. So I have to pick the topic by the time that goes out on Saturday or Sunday. And some days, I don't even really remember if I'm doing one. I look at the calendar at DTS and boom, there it is. Oh my gosh, I'm doing one. What's the topic? And then you get kind of just brain frozen. You ever have that happen to you, where you're under the gun and you're like, I have all these topics in my head, but I just can't really pick one. By the way, here's the calendar at DTS this year. But the reverse of that is like these Saturday things is when, okay, no topic, don't worry about it. And then the night before, all these topics are pouring out of my brain and I can't write them down fast enough and I end up with a 7 hour presentation. So I did throw some slides together. There's going to be two quick little topics that we're going to do. Here are the two little half topics, and here's what I've been saying. This event is the exception where I don't have a topic chosen. And I also like to leave some time for questions for you. It says, just time to banter a little bit about whatever you want to talk about. As long as it is somewhat market related, trading related, we can discuss it. So here's the two little topics that I decided were most top of my brain that I thought I would get into as just some, fun little Saturday morning topics to do. The first one's going to be funny math, and this is in the category of what not to do, and I'll talk about that a little bit more as I get to it. And the second one is going to be, I'm going to give you, well, what was supposed to be a sneak peek into an email that I'm going to send out to all members this weekend, not just the ones that are DTS Seminar Program members, but to everybody. And it ends up probably being a little more than a sneak peek. It's probably a pretty good rundown of what you'll be getting over the weekend. And it has to do with day trading. This one does specifically, not long term, and how you spend your time during the day. So we'll run through that, and I think it'll be a couple of fun topics. All right. Any questions before we get going? Question, Ricardo? Oh, Ricardo. Ricardo's asking, Paul, in the long-term trader, if I join now, do you have any new trades in the horizon? It's not a fair question, Ricardo. The answer is always yes, and the answer is always no. I mean, there is no great time to join. My thought right now is it's a little bit more of a chill time right now, and I'm very happy with what I got and how it's going and how I'm set for the moment. But the thing is, Ricardo, I mostly look for unique stuff. So Monday morning, there could just be something, So I can't really predict that. I don't keep tons of trades long term. I know people that have 50 long term positions. I personally, I think that's foolish. When you get the long term trader, there's a little introductory welcome thing you get that explains some things. And one of it is that I would consider 6 positions to be completely maxed out. Completely maxed out, and I wouldn't have 6 unless the first 3 or 4 were well profitable. So right now there's 4 positions in there, but they're all pretty well seasoned and doing well. So you really can't say. I know you want to maximize your thing by jumping in at just the right moment, but there is no right moment. I can't predict at all that there will or won't be a new position I'll be taking this week. Okay. Tell you what, Loic, that's a very general question about the current market environment. If you don't mind, let's save that one toward the end when I'm done. Let me just do this quick little. I have like 20 minutes worth of stuff, and then we can get to. I kind of meant if we had any questions about like what I'm about to go over. So let me run through this real quick. This won't take long at all. I'm not going to burden you with a lot of questions. We'll just kind of run through it here and take a look. So first one, funny math. Let's take a look at funny math. Let's begin. There is right and wrong, and there are different ways to be right. There are great variations of how to make money in the market, and there is wrong. Concepts that will never give you odds to make money over time. They may work once in a while, which only adds to the confusion. This first topic here is about what not to do, and you probably hear me talk about that more than occasionally. The reason is because in teaching people for a long time, you try and really I just have an absolute goal commitment to anybody who, signs up to be trained by me, that they get it, they make money, that they're, just thrilled and very happy. And when that doesn't happen, of course, it makes me extremely anxious to always figure out any reasons why. Now, the first reason a lot of people don't succeed is because they never really try to learn it. They never get any kind of training. It's very difficult. I provide you with the, I think, incredible resources on the free stuff page. I think the free stuff page is the best source of information anywhere on the internet. And I do that so those of you who want to learn on your own or try to can do that. Here's the free stuff page. I'm sure you all know about it. Because I tried to do that initially too, many, many years ago. And also, a lot of people just aren't ready to commit the time or resources to learning, so this is kind of a good little preamble. And also, of course, the free stuff page is a necessary component for the seminar program. People are required to understand everything that's on there because it's all great information. But beyond that, why would somebody accumulate enough information to make money? I see people that have the technical skill to make money, and yet they still struggle. Well, there's one obvious reason, and that is some people have more serious psychological issues than other people. Psychology is a big part of trading. There's absolutely no doubt about that. You can't deny that. It is for everybody to some degree, but for some people it's huge. Some people just become absolutely blind, deaf, and mute in front of a screen for psychological reasons. Those can be hard to overcome. The answer to psychological issues is to have great confidence in what you're doing. Confidence destroys psychological issues. Do any of you ever do any public speaking? Even on the internet? Do any of you ever, yes, give me a one. Any of you ever have to talk in front of a larger group of people? On the internet, in person, in the past, whatever. Okay. Here's how I am with that. A lot of people have a fear of talking to a large group of people. And to me, if I know my topic intimately, if I know my topic perfectly, absolutely well, I have zero fear. Like when I talk to you guys here, I have absolutely zero fear. But if you put me out there with a topic that I'm not 100% behind, don't believe in, or I'm not an absolute expert in, I become very nervous, right? I think most of you are probably like that. Agree? Would you agree with that completely? 100%? And it's really no different in trading, right? When you have the confidence, you do everything right. And when you don't have confidence, it leads to having less confidence, doing wrong. It's that downward spiral. So that certainly is one reason. But there's another reason that I run into a lot. And it probably is what I would consider to be my most aggravating situation. And this would be somebody, let's say, who's a student of mine. It could be somebody who just learned on their own, but a student of mine that's struggling. And the next most common reason to me is what I call because they never embrace what I teach them. They never really embrace it. Yeah, they can repeat what I taught them, and they can say what I taught them, and they can find some stuff on charts, but in their head, they're not really doing that. They're still stuck on old habits, which may be some technically wrong things, or a lot of times it's still based on fundamentals, news, and earnings and that kind of stuff. They just can't short Apple stock. You can't do that. It's stuff like that that very, very much frustrates me. And the words I say to them, look, you're not embracing what I teach you. So to me, one of the big impediments to people is removing the incorrect stuff from your head. Does that make sense? Yes, Jess, appropriate question for now. Does paper trading help? Absolutely. And that's why I require that paper trading is an essential thing, but not very long, though. You should be paper trading, if you're kind of doing it full time, Jess, so you should be doing it I'm sorry, John. You should be doing it a couple, 3 weeks, 4 weeks, whatever it is, tops, to get to understand and learn what you're doing. But then you should quickly switch to very, very small risk amounts. And this is explained in one of the videos from chart reader to trader investor. And it's also going to be in what I'm going to do this Friday. Next Friday, the 23rd, is going to be the intro class, and we talk about that there. So let's move on from here. But that whole little preamble is just to say, I think it is very important to not just understand that what you're thinking may be wrong, but to understand it should not be used. And one of those things is fundamentals. Trying to use fundamentals is just completely wrong. So you've heard me talk about this a lot, but let me just, again, keep putting nails in the coffin for those of you. If you ever pull up an earnings report, you're wrong. If you ever try to read an earnings report or read somebody's analysis of a company, or if you read brokerage upgrades and downgrades, you're reading complete crap. You're reading what somebody wants you to believe for their own reasons. It does not happen. It doesn't work. Funny math, looking at fundamentals is not just wrong. It's just wrong. It's not okay as a confirming thing. Some people say, oh, well, you know what, my universe of stocks is going to be ones with good fundamentals. No, that's not okay to say that. It's completely wrong to incorporate it in your thinking whatsoever. It's not okay to use it as a what. It's not okay to use it as confirming. There's an event out there called Confirming What in one of the prior events. Go read that. That's the recommended past video event to watch. Confirming What is the title of it. And it talks about the crutches people use that do nothing but confuse the situation rather than getting you to think clearly. You have to think clearly and make decisions. It's about a moment in time. It's about making money. It's not about being right. And all of these things are part of what you have to learn. And any reliance at all on funny math is going to only hurt you and confuse you. Even if it makes you, confirming. What if it makes you stall on the perfect trade? What if you have this perfect long-term setup and you think, oh, geez, you know what? Boy, this analyst doesn't like this stock, and I think they're the wrong sector, and I don't even like their product. I'm not going to do this. And it's the trade of the year for you. Well, you stalled because of the wrong reasons. So let's take a look at this. Now, the reason I'm doing this, I always thought about doing this. And by the way, if you want to hear more about this Friday is the Intro to Mastering Technical Analysis class, which is free. You're all going to get invited to that. So it's all afternoon Friday, 12:30 to 5. So plan on being there if you've not attended it. If you've attended it once or twice, attend it again because there's a lot of good information in there. All right, so we're going to look at three companies real quick. Now, this is about earnings. And I was going to use current earnings, but we just started earnings this week, and there's only a handful of banks that did it, and the banks are kind of squirrely. So I'm just going back to recent earnings. So this is TJX. And naturally, you can find examples of this all over. You can find examples where this isn't true, but I just want to show you what got my attention to this was as I listened, to news. Again, I don't listen to news for my trading, but I'm a human being and I listen to news and I listen to some financial shows. And I always hear this thing, well, they beat last year. They beat the consensus estimate. They beat last year. All prices are soaring right now, right? Stock prices are just going crazy. And it's one of these situations where bad news is good news and good news is great news. And stocks just keep soaring higher and higher and higher. And how do they justify it? They have to come up for it. Well, we beat the consensus estimate. We beat last year's number. And then some of these companies, I'm thinking, well, last year they were in the toilet, right? Of course you beat last year's number. So I picked out a few stocks and looked through. And a couple I looked at, this wasn't true. It's not true across the board. But let's do a little contest here. So this on the left here, this is, and I put Alpha Curry, that's a site I went to. I just Googled something and I never heard of it, but I gave them credit here because they have a nice little site for doing this. TJX is the stock we're looking at. And I want you to take a look. This is, I put in red here. The red box is me. It's not from the site. May, the last earnings that they did. The year before that, 2020 in May. And the year before that, 2019 in May. So let's go back 2 years, and I'm saying this because this is pre-pandemic, right? Now, TJX, obviously, retail store, we expect that got hit from the coronavirus, right? So, in the lockdowns. So back then, the stock was $53.26 the day after its earnings, and earnings were 57 cents per share. Okay, got that? 57 cents. You don't need to run PE numbers or ratios. I don't care what it is. Just take a common sense look at this, right? So 53.26 is the price 2 years ago based on 57 cents per earning, right? So let's take a look. A year ago, the stock price was 54.30. Now, this is in the middle of the shutdowns, right? May of last year, or, shortly after the coronavirus thing started, right? So what were earnings during that time? Anyone want to take a guess? 57 cents apparently justifies $53 in stock price. What were the earnings here to justify a $1 increase in stock price? Anybody? Amuse me. Take a guess. What do you think? If anybody actually has TJX earnings numbers memorized, I'd be shocked. -10, -50. Okay. On here you see the numbers. There's estimated and there's actual. So both numbers are actually on here. Yeah, well, to justify that $1 increase in stock price, earnings were -74 cents. -74 cents, right? Now, okay, what do you hear on the news? Last year, what did you hear on the news? I don't remember, but I'm sure what they said. What did they say? Well, of course, they're being hit because we're in lockdowns, but Let's look forward to after the lockdowns, right? I mean, stock prices are always future looking and based on what the stock is going to be, and this is a temporary thing. But still, it's even priced more than what it was a year ago. Okay, so they're doing well, but the lockdown hurt them. Okay, all right, I can buy that. I can buy that. So now come forward to a couple months ago. Wow, we're up to $67.38. So now we're past pandemic, right? So now we have real numbers, real retail. What are you really doing? We're above 2 years ago at 57 cents. So now here's where you got to say, okay, I get last year. I understand that. That's temporary. But now, how much are we above 2 years ago to justify a 20% increase in stock price? What do you think EPS is here? Earnings per share is EPS for you fancy fundamental people. What do you think we are there? Yeah, pretty awfully close, Trees. You amazing knowledge you have across the board. We're at 44 cents. So how does this make sense? And again, and they say, oh, last time stock price went up, earnings were good. They blew away last year. Well, of course we blew away last year. Don't tell me that. But we're way under 2 years ago, and the stock price is 20% higher. Do you see the point? And the point of this is very simply, people sit there and study these reports. Yeah, I know, and that's what they have to do, Jim. Of course, they have to explain it. They have to, justify it. And what you're going to see, folks, is that right now, the same people that are telling you that this number is fully justified based on the future, blah, 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 and blah, 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 and the dollar, this and this and that and that, very shortly in the future, they're going to be telling you that even a lower price is way overvalued because look at the P ratio, right? It's all just justifying what's going on. That's all it is. Let's look at another one really quick. I won't take as much time with this. Twitter. Now, Twitter really should have benefited, I would guess, just a common sense view from the coronavirus, right? Everybody's sitting at home tweeting instead of out working. I don't know. So 2 years ago, $40 stock price based on 15 cents earnings. Well, Twitter did drop to 2068 on no earnings. I guess that makes sense, right? That makes sense to me. So a year ago, okay, for whatever reason, they're not making any money. The stock price dropped in half. Now we're 50% higher than 2 years ago. So they must be blowing away this 15-cent number. No, they're at 6 cents. So they're making a third of the profit, and the stock price is 50% higher. Oh, that makes sense to me. Yeah. But of course, because Twitter is going to what? Pick your topic, news reporter. Here's a weird one. Wyndham Hotels. So certainly they were affected by the virus, right? So 2 years ago, stock price 136 based on 161 earnings. Okay, whatever that is, that's what it was. Good, bad, high, low, who cares? Dropped to 79.25. Well, of course they did, because they got slaughtered, right? Down 354. Negative 354 in earnings, right? But of course, it's a temporary thing, and they're going to come back and be as good as ever. Well, what does as good as ever mean? Well, they're already almost back to their old stock price. So I have to assume that they're pretty close in earnings too, right? No. They're still negative 241 without any, and I know we're just coming out of the lockdowns, blah, 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 blah. But you get the point of this, that this is a complete waste of time to even be listening to, understanding, or trying to justify these numbers. It's all just garbage. I'm going to go on to topic number 2. That's good. That's good, Caden. And I explained why I was doing this, because it's not the majority of people, but one of the blocks for people. And it may not be this. One of the blocks for people is very simply that they are not focused on the right things to make money, whatever it may be to them. And I just want to keep driving those nails in those coffins so that your total focus can be on what it is needed to make money, right? So I can get to any of your questions and still be out of here at 9:45 or so. Sneak peek at an upcoming email. Wrong, right. This is a day trading concept right now, day trading concept. Sitting there all day as a day trader, 6.5 hours, turning off the computer at 4 o'clock market time, firing up again at 9 o'clock the next morning. That is wrong. It's just wrong. There's no way to justify that. There's no way to tell me that that is going to be the right thing to do. What is right? Striking only when you have the highest odds. Why did I put a picture of I think that's a hawk up there. Could be a falcon. I'm not a ornithologist, even though I know the name for somebody who studies birds. What does a hawk do? Do you ever see a hawk? We have a lot of hawks in our area. You ever see a hawk make one of those dives and come up empty-handed? Even if you watch the TV shows, you ever see a hawk dive and come up empty-handed? They don't do that, right? They're out there perusing. They're coasting around, and when they pick something, they come down 100% chance they're going to come up with a rat, a squirrel, a rodent, whatever it is that they eat. They're coming up with it, right? Because that's what they do. They just keep perusing and they strike when the moment is right. And it's kind of the way I always like to vision myself as a trader. Is just kind of looking at a whole lot of stuff and saying, you know what, yeah, that could make money, that might make money, but here's the highest odds thing, because I always want the highest odds things, right, in front. So strike when you have the highest odds. Now, what does that mean in day trading? Well, when do you have the highest odds? Well, the answer to that question here is not necessarily a right-wrong question. This is an area where there are different ways to be right. I have a personal preference, and I want to explain to you my personal preference, but I want to make it very, very clear here that my personal preference is not the only way. What I teach in technical analysis allows you to look at a chart and find various things to do. Right? It's not like it's restricted to one setup, one thing, one time. It's learning the language of charts. So I think it's imperative that you find your highest moment of probability. And for some of you that may be at lunch, it may be later in the day, there's different setups and different things you can do to find higher odds. But let me explain to you why I like the opening hour to 90 minutes. Really understanding technical analysis gives you the ability to find many different high odds setups that can occur anytime. So the following is what I personally like, but it is not wrong to pick a different 2 to 3 hour time period. It is wrong to sit there all day just hoping to, continuously run into things that are going to work for you. I like the opening 90 minutes. Why? It incorporates the first 3 reversal times. If you know, in quotes, that 90% of the time a stock hits its high or low for the day, or at least for the half the day, at 9:35, 10 o'clock, or 10:30, does that give you odds? Think about that a minute, folks. Let's presume that's true, right? You don't know that's true probably because most people don't even know what reversal times are. If you presume that to be true, yes or no, does that give you odds? If I told you, hey, this stock you're about to look at, there's a 90% chance that it'll hit its high or low of the day, that opening hour, not only the opening hour, but either at open, plus or minus 5 minutes, or at 10 o'clock, plus or minus, actually plus 10 minutes. 10 o'clock reverse time is 10 to 10:10. Or 10:30 plus or minus 5 minutes. Does that give you odds, everybody? Absolutely. So you get past 10:30 and then tell me where the high or low for the rest of the day is. You follow what I'm saying? And it's a complete carnival. Absolutely no clue, right? We may continue dropping. We may rally. We may reverse. And it's not to say that you can't make money during any of those times. It's not to say that. But what I'm just saying is if we open blah, 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 high of the day, guess what? You can't lose money if you short the high of the day, right? Now, here's the problem. If you say, well, Paul, okay, I'm going to jump in here. And again, this is not wrong. I just feel it has lower odds personally, the way I look at things. You say, well, Paul, you could have jumped in there. Yes, I could have. Now that you're at the end of the day and you're looking back at the chart, it's pretty easy to make money. But how do you know the pattern's not going to be this? I mean, naturally, we look at charts to try and determine what. But the thing to me is, for me, I have much higher confidence finding this than I do knowing that that's going to continue or possibly reverse. Does that make sense, everybody? Makes sense? And again, I'm not teaching you this is what to do. Again, I want to emphasize this is my personal preference. You don't have to do this. I'm just explaining to you why you need to have concepts that you are comfortable with, you have high confidence with, so when the time is right, you just strike. You don't think about it, you don't hesitate, you just do what you're supposed to do. You can usually narrow it down to one depending on the pattern. In other words, even though I'm saying there's 3 reversal times, generally speaking, I'm focused on one because I know what it's going to be. Because the pattern that stock has will tell me that it should be the opening 5 minutes, or I need to wait a half hour, an hour. Now, sometimes you can't tell the exact one. Sometimes it could be 9:35 or 10. It's not always clear. Sometimes it could be 10 or 10:30, but you usually have pretty good odds which one. And if you know it's going to be one of those 3, hey, that's great. My concept is if you short the high of the day, you can't lose money. Of course, if you buy the low of the day, you can't lose money. But wait a minute. Let me get some comments on this from you. I've read it in trading books all over the place. You are not supposed to find the highs or lows. Isn't that true? Is that true? Is that true? You're not supposed to find the highs or lows. You're not supposed to short highs. You're not supposed to find the high. That true? Certainly you've all heard that, right? It is what they say. Well, there's two reasons that they say that. Number one, maybe it's semantics. Maybe when I explain to you what I mean, maybe it's not what they mean. Or it could be they're just idiots. They're just stupid people that say stuff like this. How is it that you don't want to short the high of the day? How do you make money if you're not shorting near the high of the day or buying near the low? A lot of these days, a lot of these stocks are narrow ranges, right? How do you make the most money? You short the high. That's exactly what you do. That is your goal. And yes, if you understand technical analysis, yes, you do short the high of the day. You do buy. That's what I do every single day. People in the room. Is this not what I do every single day, 100% of the time? Absolutely. Now, I'm not saying you can't find later entries. You absolutely can. But again, my personal preference is to get that moment in time. Now, here's where it could be maybe semantics, right? When I short the high of the day, let's say a stock does this and boom, it drops, right? You say, oh, Paul, that's bad trading. You're finding the high. Well, I'm not finding the high. What am I doing? I'm not really finding the high. Here's the beginning of the day. I'm not really finding the high of the day. You know what I'm doing? Right? I may be doing that. Right? So I'm not finding the high. The high was way up here somewhere. But it may be the high of the day. So in other words, I'm not necessarily finding the all-time high. I'm not finding the high for the time frame I'm playing. I'm finding a high, but that high is a relative high. Does that make sense? Kate, how much reversal time increase your odds? Do you have a reversal times increase your, whoops, hang on. Reversal times increase your odds 91.26% Monday through Thursday. On Friday, it drops to about 90.55%. Yeah. No, there's no odds. You can't do stuff like that, really, Caden. It's all a matter of perception. It's all a matter of how you view it. But if you hit the high or low of the day, the opening minutes, or 9:30 or 10 or 10:30, doesn't that just increase your odds tremendously? Whatever number you put on it doesn't matter. It doesn't matter. And of course, even understanding this concept is worthless if what? Unfortunately, while this is maybe a piece of the puzzle, walking away with this is not going to make you money on Monday. Well, not only if you don't incorporate it, but if you don't even understand the chart patterns. In others, I'm going to show you a couple of trades here. And, well, let's go to that. Here's yesterday. And I just want to show you, if you think I'm just throwing this on slides to show you something, no. This is yesterday. I did only three trades yesterday. Entry, 9:30, the opening minute, 9:35, still 9:35 reversal time, and 10 o'clock plus or minus 5 minutes. I didn't make this up. People in the room, a couple of you in the room with me, true, right? You guys see this? True, somebody? Just so the people don't think I'm making this up to throw it on a slide. True, right? I even have a slide, people in the room, and the slide says I'm off the mic until 10 o'clock reversal time because it's a low odds open. That's what the slide even says. So that's how much I try to incorporate it. All this is meaningless, though, if you don't know what stocks are most likely to do it, right? No, this is a really good day. My goal is making 1 hour a day. Yesterday was a really good day. I made almost a whole week yesterday. Yeah, so it was a really good day. The week was about 50% over goal, so it was a good week too. But it just happened to be that this was a perfect example of what I'm teaching today. I didn't do this on purpose. I just last night said, well, let me get some slides from trades. I go, wow, look at this. The three trades yesterday were perfect reversal time type concepts. But here's why this alone is not worth all that much. It's because how many stocks did I look at, somebody who knows me, to find these three? How many did I look at going back 12 hours? How many stocks did I look at? Eric, exactly, about 1,200 stocks to find about 25 that went on the list, to find about 6 or 7 that went on the hot list, to take 3, right? So you still have to know what you're looking for. You still have to look for the stock that is the highest odds and know, hey, this one here. So let's go to RIG, for example. Here's RIG, right? The strategy declared to short any weakness after the gap up. So this is a gap up, but it was a gap up that was to be shorted. This is one of my favorite type setups, and I'm not going into the whole strategy here. You can look at your own charts. Rig had two big red bars. It was really weak. A lot of times these things gap up. They just collapse, but you want to see it. So this is what I call a tier 1 entry, meaning don't miss it. Any sign of weakness. So entry is under 372, stop over 378. The high of the day was 377, set at 931. The opening bar, that's a 5-minute chart, the opening bar set the high. Entry. Boom. Just a little off the high. If you trade a lower time frame, do you think you... Yes, Caden, of course. I mean, the more you come down in time frames, the more you will find setups. If you trade a 1-minute chart, you're going to have way more setups than if you trade a 15-minute chart per stock. But nevertheless, the thing is, Caden, though, I don't want to be trading a 1-minute chart if it doesn't make sense on the 15-minute or 60-minute chart. It all comes together. You see, you can't just pick a chart. You can't just pick a 1-minute chart in a vacuum and say this is high odds. I don't care what the chart looks like, because they all exist inside of other charts. And understanding the relationship between multiple time frames is the single most important thing you can do in trading. So sure, you can find more potential entries, but they could be to terrible overall setups, right? Well, the entry is a tier 1 recovery. This is not actually a gap concept. Yes, it had a little gap up, but the gap concepts revolve around big gaps that change charts. This was a non-event type of gap. It did gap up, but it was just pennies. So it's not a tier 1 gap. I use the tier 1, tier 2, 3 also for entry concepts. So it's a tier 1 entry, meaning do not miss it. Okay. So the second one, NEM. Strategy declared short any weakness after the gap down. Now this is a gap down that declared getting in as quick. And again, this is not a gap strategy. I know it's confusing if you're new to this. It simply was a breakdown on the hourly chart on a little tiny. It's a $60 stock that gapped 10 cents. It's not a big gap. It's not a gap concept. But nevertheless, the little mini gap, I call it, was part of it, right? Now, this one also could have been done almost immediately, any secondary sign of weakness, but I was busy. What was I busy doing? I was busy doing rig. I can't do two things at the exact same moment, so I missed this one initially. So it fell, boom. So I shorted the 1-minute chart on that little comeback rally, still though at about 9:35. So that 9:35 reversal time, guess what? That little comeback rally, 9:35, set the high for the rest of the day. Very, very common thing, okay? Is because it's probably bearish that you focus me? No, actually, I have a good question, Lolk, that market consideration is always something I look at, but the market correlation recently has been like 0. And especially when you're doing some of this stuff first thing in the morning, I'm looking more at unique setups than I am looking at a main focus in the market, okay? So high today set at 931.6322. And again, I'm not just looking for stocks to prove what I'm saying. This is just what I did yesterday. And, if you go back through the days, not everything's 100% like this, obviously. And there's some stuff I get wrong. I had a losing day on Thursday, I think it was, right? I lost 1 hour. I lost 1 hour, whatever, or a half hour or something on Thursday. Because sometimes you just don't get the right entry, or you don't give the right room, or sometimes you're wrong. But I'm talking, trading is always about odds. It's about finding the high odds type of setups. UAL. 5-minute chart, 10 o'clock reversal time, right? The strategy declared to let it test the 4660 area. So in other words, this stock had gapped up, and it wasn't bearish on the gap up, but it gapped up into a resistance area. So I want to see it bang its head on that resistance area enough to prove to me that it didn't have the buyers. Trading is always about monitoring the battle between the bulls and the bears, between buyers and sellers, between supply and demand. It's always that battle that you're monitoring. So I have a theory, if you will, a hypothesis that the stock had been downtrending, and this gap up will run out of steam running into a resistance area. Bam, 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 it did. So I come in here in short weakness after it refused to move higher. This one I wanted to see prove that it couldn't move higher. It was a different setup. It was a different concept. So here, high of the day was set at the high, but I expected it to test that high at 10 o'clock. So that's why I waited on this one for the 10 o'clock reversal time. By the way, this is a Friday. I like to be done Friday and start my weekend. I left money on the table on all of these. If you look at my exits there, I was done and shut down at 11:30 or something. And you look at these, they all dropped twice as much as what I took out of them. So this, except Rig. Yeah, Rig set the low later, but yeah, I didn't get all of that either. So they're literally, if I would have just walked away on my entries, this day would have been double or triple what it was. It doesn't always happen, of course. It was a weekday across the board yesterday. Is this just a fluke? Okay, fine, Paul, yesterday this happened. Well, no, I can tell you it's not, and people in the room know it's not. But just for fun, I said, okay, let's look at the market. Let's look at the QQQ, the sum of all stocks. There's a pretty good average to determine if this is right. Yesterday, 9:35 high of the day. The day before that, 10 o'clock high of the day. Day before that, 10 o'clock high of the day. Go back the next 3 days. 2 days before that, 10 o'clock low of the day. Day before that, 10 o'clock low of the day. This day, 4 days ago, it was a noon high. Didn't fall into the pattern. Noon is a reversal time, but if you tried to do 10 or 10:30, you wouldn't have worked out right. 3 days before that, going back 7 days, 10 o'clock low of the day. Before that, 9:35 high of the day. Before that, 10:30 high of the day. Do I need to do any more? No, of course not, Carmen. Matter of fact, I teach you to say, if you want to go back and look at your chart to learn something, that's fine. Oh, gee, look at this pattern. I should have given it more. But you never go back and say, I did the right thing, but now I'm mad because I could have made more money. You can't do that. You have to do manage, enter, take trades based on the most likely odds, not on what could have theoretically happened. I just showed you the last 9 days in the market. 8 of these days subscribe to exactly what I just told you. Are any of you shocked by that? Yes? Or you already know this because you listen to me enough? So this is why, for those of you that are not in the room, that don't understand, this is why I focus on the first hour, because this is what I like doing. Now, there are some days where I acknowledge that, hey, you know what? Based on this pattern, we're probably not going to see highs or lows until noon, and I'll want to come back. I'll say to them, hey, let's reconvene at noon today. And it's fairly rare. 95% of all my trades are done before 11 o'clock. And that's what I like doing. And again, it's not to say you can't make money later. Again, I want to emphasize, I'm not telling you this is how you trade the day. I'm just telling you this is my comfort zone. I'm comfortable shorting a stock that's running up at 9:35 with the right setup. Some people can't do that. They'd have to wait until the stock's 3/4 of the way to the target before they even thought it was weak enough to short it, right? Yeah, I made up that 90%, Caden, just to be clear. I don't like to ever say anything untrue. I didn't do an actual statistical analysis on a computer and run it over 10 years, and I just made up that number. But you go look at the charts. The point of it is it happens a phenomenal amount of the time, enough that you should incorporate in your trading, okay? Don, Don brings up a good point, is that if you're trading the opening 5 minutes, you're reduced to a lower list of stocks. And that's why I have one of the stocks one of the lists I look at, Don, is and well, this will also incorporate what somebody else asked me. I look at daily charts. I look at 1,000 daily charts, but a lot of those daily charts, I can't really do the opening minutes because they don't do enough volume. And that's why one of the lists I look at is a list of, I call it my hourly list, and it's the 300 highest volume stocks in the market. And virtually all those stocks, at least the top 200 of that list, are pretty much all tradable early. And those are the only ones I'm doing. I mean, if you go back and look at these stocks, Don, because you're right, what Don is saying is some of these you can't do, and a lot of them I can't do, right? You can't do some of these. I see them, and right, guys in the room, you hear me all the time. What do I say? I probably said it 6 times yesterday. It's too spready right now. It's too spready right now, right? You guys hear me say that? People in the room, yes? Can't do this one now, gotta wait. Too spready, too spready. But you go back and look at the ones I'm showing you here. UAL traded 4.2 bazillion shares yesterday. NEM traded 6.7 quadzillion shares yesterday. These stocks, RIG, you could buy 15,000 shares of RIG at 932. You wouldn't even move the needle at all. So these are things that are not a spread issue. Now sometimes you do get to things that are marginal. They're like, I know this would be really tradable at 940, but right now it's a little trickier. And that's where you just got to put up with a little bit of that. Some of these, the way I look at it too, is if I'm taking something at 935, I usually have a really good entry. If it costs me a few cents that I have to give in a little extra room or whatever to get in, it's usually still worth it. And for those of you that want some great tips on how to enter and exit trades with the least amount of slippage, there's a video on the website called Controlling Slippage and the Tradability of Stocks. It's in a special section called Educational Videos. There's only a handful of them in there. But those are fantastic. They're required for my seminar students. Go read some of those, all right? So that's how I prepare. Whoever asked that, I look at 1,000 daily charts, I look at 300 hourly charts, and I look at the gap list every day. Andres, why are you also interested in solid expansion bars? I'm not sure that I am. That is a concept, expansion bars. It's not my favorite concept, and I'd say it is a mischaracterization to say I'm always interested in those. I'm occasionally interested in those. They can be significant of institutional buying, but not always. And I look for alternatives around 3 or 3:30 when you have daily confirmation. Well, a few things. Number one, Andres, I specifically said it is not wrong to do that at all, right? I've said it 3 times now. This is my personal preference, so it's perfectly fine if you want to do that. The top part of your comment isn't true. I don't look for that or only for that or mostly for that. And I also don't necessarily agree that you have daily confirmation at 3 or 3:30. I mean, that is not necessarily true at all. You could close the day if you're in a daily downtrend and you're waiting for the end of this day and you close really strong, that's a sign of weakness, of exhaustion, where you're probably going to drop the next day. So daily confirmation is a tricky concept, and it really has nothing to do with closing strong necessarily. Okay? And besides, this is a day trading concept. So if you wait till close to start a day trade, you're not day trading. You're taking swing trades, and that's a different topic. Okay? Look, I encourage you guys to want to share trades with me. I'm not going to do that here and now because it's not the right. We don't have the time. Number one, but you can email them to me. Look, all right, you can email me your trades, and keep it to a nice sample of 2, 3, 4, 5. But please don't send me charts that are marked up. Do not send me charts. Send me just the symbol, the date, the time, the entry, the stop, the target, your exit, and why. Just a quick line on what the concept was, okay? And I'll get back to you. And even for people who are not members, I've gone into rooms with them and said, hey, let's talk about this because, it looks good, looks bad, whatever it is. Okay, yeah, for day trading, the daily chart is in the category that it can't negate the trade. It doesn't have to necessarily be in perfect full force with the trade, but it can't negate it. All right, questions. I asked a couple of you to save your questions. So I am, what do we have here? So this Friday, you'll get invites to Intro to Mastering Technical Analysis. It is the first class of the seminar program. Those of you interested in the seminar program, the next day, Saturday the 23rd, starts the 3 Saturdays in a row of the seminar program. If you're interested, have any questions, come see me about it. I'm not going to say any more. If you're ready, don't put it off. But if you're not ready, do not consider taking a seminar program until you are ready, because I want you committed to learning it and not thinking that you're going to sit there for one Saturday and become a genius. If you need day trading capital, if you email me, I'll get back to you with information about how you can day trade with $5,000. And I don't recommend you do this if that's all the money you have available. But for some people, their money's tied up in other places, long-term accounts, house. You want to day trade, you don't have the 25,000 capital you need. You can do it, and I'll show you how. And one of my favorite videos, the three-legged stool. All right. Any other questions? A couple of you had questions I asked you to put off to the end. So I'm going to kind of call this done except for questions for those who want to start your day. I'll take questions here for 5 minutes. Then we'll actually be all the way to 11 o'clock. The seminars every day on those Saturdays start at 8:30 precisely. And the first 2 go to 6 pretty much unquestionably, Ricardo. The third one typically ends about 5:30. And of course, you are not only allowed but required to take them multiple times. You should be taking them 2, 3, 4 times. There is a 100-day program schedule that is available to anybody, not just to those of you who are in the program. It maybe gives you just a little calendar concept. Here's a link to it. And I need to update this, especially with the home study coming out. But that just gives you a feel for what I think is needed to start to be successful. You're not going to be successful Monday after the first seminar. It's a process, but it's a process that I think can be done and mastered in a fairly short period of time. Did I answer the questions for that? I know one was about what I look at or what I do to prepare. I think I got that. Did we have any other questions here? And there was a couple I asked you put off till I got through all this. Criteria for day trading? Well, here's what I use, John. For my daily scan, which would be for swing / longer term, I just look at stocks that I think I pick over $2, $2.50, and that are doing about 800,000 shares or more. I think that's the number. And I come up with about 1,000 stocks using that criteria. And then I also go through and in my universe for that, I eliminate all ETFs. And you can do that if you're scanning by requiring that it has an EPS greater or less than zero, and that would eliminate all the ETFs because they don't have an EPS. And then so there's 1,000 stocks. But that list, though, however, John, a lot of those are not great for day trading, or at least not till later in the day. It depends what you're doing. You know, if you're taking a $200 stock with a $2 stop, you don't need tons of shares, and a stock trading 800,000 shares a day may be quite tradable. But if you're taking a $20 stock with a 12-cent stop at 935, it's got to be doing millions of shares. So the daily list is problematic, and that's why even though some of them end up on my day trading scan, a lot of times they end up being postponed till later or just not doable. But then the main thing that I look at then, John, is my 300 list, and that 300 list is simply the 300 highest volume stocks in the market. And then I go through and I manually remove ones that I don't like. What don't I like? Well, I don't like the crazy stocks, the ones that went from 2 to 100 and they're pulling back, because a lot of times those make the list because they're doing big volume temporarily. So I get rid of those, and I get rid of too many duplicates. Like if you do that list, you'll end up with like 30 or 40 oil stocks. So I take out some of the oil stocks. I don't need 40 oil stocks in there. And some duplicates like DISCA and DISCB or whatever it is. I eliminate PRBA because I don't like typing the period. So, so I end up with that's the most tradable list to me then. The most highest volume stocks minus the ones I don't like. Okay. Thanks, Thiago. Hope you enjoyed today. Have a great weekend, everybody. We'll see you if you're in the trading room. We'll see you on Monday. If you're not in the trading room, you can take a trial and come join us there. Just, go to the site and go to the services page and figure out how to take a trial. If you can't figure out how to take a trial, you probably wouldn't do well anyhow. So I always say that sarcastically. And for those of you, if you're not in the room, we'll see you guys on Friday for the intro class. You'll get invites during the week to that. Okay. Have a great weekend, everybody. See ya.